I'm Christy Duffy for Smart Trend News. Kraft Foods, the world's second largest food company, is scheduled to report its second quarter earnings on August 5th. The street estimates that an EPS of 52 cents will come out with revenue of $12.33 billion. With me to discuss what can be expected is Jonathan Feeney, food and beverage analyst at Janney Capital Markets. Jonathan, thank you for joining me today.
Thank you so much, Christy. Thank you for having me.
Jonathan, what are your estimates for the second quarter?
51 cents in earnings, just a touch behind the street, and $12.2 billion in sales, which is a little touch beneath consensus as well.
Okay, and the Consumer Price Index is due out on Friday of this week. Consumer spending power has increased over the past 2 months. May and April saw fractional dips in inflation, down 0.2% and 0.1% respectively. For June, consensus is for a drop of 0.1%. Consumer sentiment is also due out, which has been on the rise for the past 3 months after hitting a low of 69.5 in mid-April. Do you anticipate Kraft sales to be positively impacted by consumers who may be weaning themselves off the lower priced goods?
In certain pockets, Christy, I tell you that it's really a bifurcated consumer out there. I harken back to the Kroger call a few weeks ago where they said things like organic, floral, and fine wines were up, but at the same time they saw signs of increased food stamp usage. This is all happening against probably the most important factor here, which is a backdrop of falling visible costs for a lot of these food companies, as well as a value-seeking consumer, with that increase in food stamps. So I'd say there's still at the margin more value-seeking. There's ability to provide that value in the food chain. And why I'm a little bit beneath consensus on a lot of these food companies, Kraft included, is the promotional environment. Retail is still hot and is heating up. Consumers are looking for that value, and they're providing it in the form of lower prices.
And another key factor to look at here in preparation for the earnings is this is the first full quarter that the $18 billion Cadbury acquisition will be reflected in Kraft's earnings results. How are the two businesses integrating at this point, and how much cost savings anticipated by Kraft do you see being realized?
So far so good as far as the integration. It's very, very early to tell. As far as cost savings this quarter, it's difficult to tell any at this point. I think when you talk about a business of this size being absorbed without a tremendous amount of overlap, either geographic or category-wise, I'd say the geographic overlap, is only about 35-40%. He just completely new gum and chocolate products globally. So I wouldn't think this would be a situation where minute one you're going to get a lot of cost synergies. I think over time the real rationale behind this deal was accelerating the top line and getting Kraft, this giant global food company, into some growthy pockets and growthy markets it's frankly wanted for in the past.
All right, and Kraft recently laid off about 3/4 of Cadbury's global headquarters staff. Is Kraft still on target to earn 5 cents more per share in 2011 because of the merger, would you say? Is that too early to tell as well?
I think everyone on the street regards that as conservative guidance given the size of the transaction and where it was financed. A lot's going to depend on the environment for the emerging market consumer, where the legacy Cadbury derived about 30% of its profits. So far, so good. In some other spots, it seems like emerging markets are doing well. So, yeah, I think yes. Yes is the answer to your question. I think they can get that. I think, how the merger is integrated and whether it's a success or failure, time will tell.
All right, and Cadbury headquarters, which was formerly on the outskirts of London, was recently closed by Kraft, which came as no surprise, as they did state that when they bought the confectionery maker. However, Kraft will still be selling the candies across Europe. Are both the Cadbury brand as well as global Kraft Foods products being neglected by European consumers? Especially due to the EU's poor economic condition. Do you expect those sales in that region to have any impact on this upcoming quarter's results?
Sure. Obviously there'll be a bigger impact. It gives you a little more euro exposure, considerably more sterling exposure. in quarter one, which at the moment is a negative thing, but of course it's not in the comp, so it's neither here nor there, this being the first full quarter. The more important part of your question, which is, how will it behave operationally? Keep in mind, I mean, one of the beauties, we loved Cadbury for a long time and still love the business. We think this was a great transaction for Kraft to pursue because mainly because these businesses where they are in developed markets aren't subject to a lot of the pricing and promotional pressures, right? You're talking about low price points. You're talking about impulse items. You're talking about channels that aren't necessarily high volume, a lot of convenience stores, kiosks, you name it. Places where, it's not like people are looking at the shelves and poring over, oh, should I buy, my Cadbury Milka, should my Milka, my Cadbury, should I buy one or the other? It's 5 cents more or less expensive. People are loyal to these brands. Store brands are a small part of the category. We view that as a very good developed market business for that reason. And of course, the emerging market growth speaks for itself.
All right, well, now taking it back to the U.S., new monthly international trade data released just this past Tuesday showed U.S. exports in May rose by 2.33% compared to April. However, imports increased even more, pushing the U.S. monthly trade deficit to $42.3 billion. And for every dollar of goods and services we buy, that is more than the amount we sell abroad each month. We have to start selling off assets or going to debt by that amount, dollar for dollar. Does this mean investors will or should start selling off KFT? What's your rating on the stock as well?
My ratings are neutral on the stock. I don't think the macro trade info really tells you a whole lot about the consumer staples businesses. One of the beauties of the consumer staples business is here you have the rare instance of global brands that are appreciated. Kinds of products that are liked by consumers the world over, and many times these things are manufactured locally. As far as I understand it, the structural trade data has been the way it is for some period of time. Why we have a neutral rating on the stock here is simply that companies like we recommend a PepsiCo here at a comparable valuation, about a 10% premium at this point, have established 35% of emerging market growth already, and to us, that's a proven versus an unproven as far as the emerging market growth goes, and domestically, Kraft faces a lot of the pressures that other food manufacturers we believe will be facing in the coming year on margins, which is providing those discounts at some expense to shareholders, to protect the long-term franchise. We think the valuations are okay. We just think there's better growth in staples elsewhere, and PepsiCo is one of those places.
All right, now looking at the price of the stock, in April, KFT hit a year-to-date high of $31.07. The stock closed out Wednesday $29.32. Aside from consumer spending, is the stock being pressured by any factors that you can explain to us?
Sure. I think the entire sector's been under some amount of pressure recently with the broader markets. I think within staples, I think General Mills' announcement of what was viewed as disappointing guidance, despite a strong quarter, disappointing coming fiscal year guidance on the gross margin side, was a wake-up call to a lot of holders of packaged food stocks that, hey, these businesses that have been able to maintain pricing attained during periods of high cost inflation are now being called upon to deal some of that pricing back as consumers seek value within the store. It's happening in some categories. We'll know a lot more in a few weeks which categories it is and how across the board it is. But I would view, Christy, some of that pullback in the stock being the admission by investors that this is a risk that may have been unappreciated historically.
And your price target?
$32.
All right. Thanks so much. Jonathan Feeney, who's the food and beverage analyst at Janney Capital Markets. Thanks again, Jonathan. I'm Christy Duffy for Smart Trend News. For further updates on earnings, please be a subscriber to our YouTube channel, Trade the Trend. And don't miss out on our interview on Google earnings. That will be available tomorrow as we question Clayton Moran of Benchmark Capital on what he sees next for the internet search giant.